All right, folks, welcome back. This is going to be a short little ditty on the S&P 500 June contract 2022. This is our daily chart. And before I get into it, just let me remind you that I do not use WhatsApp. I'm not going to be in the comment section asking you to reach out to me. Okay, hit me up. Let's talk. None of that stuff. That's all scammers. So I'm never going to ask you for money. I'm not going to direct message you. I'm not going to direct message you on Twitter. Okay, all those people are just trying to scam you, trying to pretend to be me. I'm not asking for your money. You're here to eat off my table for free, and I'm happy to do it. So just know that those accounts are not me. Please report them and ignore them. All right, so the S&P 500 daily chart. We're going to look at this day here. And before we get into it, I'm going to bring your attention to the 16th of May on that low. This morning on Twitter, I was not able to participate in the early session movement on the stock indices because I've been trying to do things to share with the audience that has been mainly following me because of Forex. I noticed a lot of you are starting to bellyache and complain that you want to see Forex, and I understand that. But even my paid membership group, they have seen very little in terms of Forex too. And I'm pushing this asset class because this is where the volatility is. Price is price. It doesn't make a difference. When Forex starts moving around big again, trust me, index futures will get slower and quiet in comparison to Forex. Trust me when I tell you the currency markets will eventually, within the next 12 months or so, probably start having some pretty wild movement. But until then, we have to look for volatility where we can find it. Now, right now is in the stock index market. So if you're a hardliner, if you're a purist and you don't want to see these types of moves in this type of market, I understand, but learn from it because it works the same way in Forex. Just know that, okay? So I mentioned on Twitter that I was in the dollar CAD this morning. I went long on that one on its high impact news at 8:30, and it was a snooze fest. It took forever just to move a little bit. Obviously, I shared that on the Twitter feed, so you can, again, go over and look at that. So I mentioned I was going to grab a bite to eat, have some lunch, and then I would look to see if there's anything for the stock index market. And I participated in this move I'm going to show you today here. I hinted at where the market was likely to go to. And let me state this going forward because I had Perry Mason over there on Twitter reach out to me saying that the bar has been lowered for calling out trades. I don't call out trades. I'm not going to put you in a trade. I'm not going to give you an entry, a stop, a target. I'm not going to do that. I don't spoon feed. I don't do that with my paid group. What I do is I point to where the market's going to go. I've already taught you how to get in. I've already taught you where to put a stop loss. I've already taught you how to put your limit orders in. I already taught you all that. Now, the problem is you don't have the experience of knowing where it's going to likely go next. So this morning, what I did was I drew everyone's attention to the low on the 16th of May, 2022. Now, if the market is above, and let's go into a lower time frame chart. Okay. And if we're in the market and we're up here, and I'm suggesting to everyone, think about this low over here on the 16th. What do you think I'm drawing your attention to while we're up here and I'm drawing your attention to this specific area, the lows of May 16, 2022? Do you think I'm referring to it as it should not come back down here? No. Everyone should understand my style is we're aiming for liquidity. So if it's up here and I'm pointing down here and taking your attention down there, I'm acting like a scout. You're the sniper in training, whether you realize it or not. Okay. So I'm trying to point you to where you should be aiming. And you have to do the work of scoping it up, pulling the trigger, and dealing with all that. Okay. So there's no shortcut to this. There's not going to be an ICT on Twitter or on YouTube that sits down in front of you and says, okay, everybody, are you ready? We're all going to buy right now. We're all going to put our stop loss at the same place. We're all going to put our exit order at the same place, and we're all going to ride these things, and it's just going to be happy, and it's it. I'm not going to do that. I never promised to do that. I'm not going to do it, period. End of story. No way. This is how I train my students. It works, folks. It does not work for lazy people. Okay, I understand that some of you just want to be handheld, but that's not going to happen with me. I don't do it. I didn't do it when people paid me, and I'm not going to do it for free either. So you don't need me to hold your hand. If I point to where I think the market's going to go, it's your job to study and look for the opportunity. The fair value gap is what you're going to be utilizing. Okay. Some of you are fixated on only looking for the setup at the opening. Well, what happens if you don't get a trade at the opening? Can't you use a fair value gap to get involved with the move if it's going to go down to something like this? Yes, and that's what I did today. So let me add the annotations in the form of showing you the executions so that way you can see. I'm not sure why this thing is not popping up. Stay on there. There you go. All right, so here's where I entered. I did 4 contracts at 4,007 3/4, aiming for the 16th low. I didn't have a whole lot of time to be babysitting this thing, and late afternoon, this could have easily whipped up, did some kind of retracement if I had any kind of stop loss trail down, and then maybe moved lower. So just to make it easy, short and sweet, to the point, your attention was drawn to the 16th, the low on the 16th of May. Let's go into a 15-minute time frame. All right, so you can see up close candle. What do you think that is right before we start to go lower? It's a bearish order block. Draw that out in time. It hits that order block on this candle here, dropping into a 5-minute chart. What is this? Doesn't look like a fair value gap until you zoom in, huh? So right in here, it's hitting, it overshoots it, granted, but there's a lot of volatility right now. This candle's high, your stop would be above there. Hold on to the position until it starts to break lower. If you want to fine tune it, this is the one I shared on Twitter in the recording. Okay, so what I saw was this fair value gap here. It hit it, created what? What is this? What's this pattern here? What's these 3 candles here? It's a swing high. So as soon as this candle closed here, I'm going to go right in here at this candle and just get in and go short, trusting the fact that we've already had a fair value gap. We already went through it. We have a swing high and it's bearish. I'm looking for what? What am I looking for? I'm looking for a run below this old low, which is May 16, 2022's low. So I'm entering here and I'm riding it out with a stop here. Everything is reduced in terms of risk. As soon as we started to break lower here and started moving in my favor aggressively, I moved my stop only because the volatility is so high right now. I just don't want to see it come back and knock me out. That's not fear. That's just sound money management. I'm not trying to take a losing trade. So here is the entry again. It delivers on the downside. I took my first partial here, one off here, and in the limit order, you watch that fill on the little recording, the vignette that I shared on Twitter. Ultimately, we started going a little bit sideways going into the beginning of lunch in New York. Here's your typical lunchtime consolidation. And then what's this? Stops ahead of lunch, fair value gap. It's almost like it knows what it wants to do, huh? Breaks lower, consolidation again, trades lower, consolidation, bumps to stops here. What's this? Oh, this ICT just makes it so complicated. Hits it, sells off, Sellside here, consolidates one more time, and trades and meets the low of the day. I think on this one, huh? It's the lowest candle low at 39.10. Not bad. So that is what I did today. I did not participate in the afternoon session post New York lunch. This is all I had to share today. Right there, 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 and there. Okay, that's going to be it for today. Hopefully you enjoyed this and found it insightful. Until I talk to you tomorrow, be safe.